Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Friday, August 24th, 2012. Welcome to Market Recap. Let's take a look at the week that's been and take a look at what we can expect out of today, Friday the 24th. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Let's first take a look at the S&P and see exactly what's happened to us and what our trend is. As we look at our overall trend, you see that we are still trading in an uptrend. So let me change the color on that since that yellow doesn't show up very well. And what we're interested in is that our trend is still going up. But we finally got what we talked about on our last meeting, which was Monday, and we finally got that rollover after 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, 12 days of an upcycle. Okay, now we're on our third day of a down cycle with lower lows and lower highs after we peaked out this week on Tuesday. So we got a reversal signal on Monday. We got confirmation on Tuesday with a lower low closing near the low of the day. We broke through this 1406 level, so we are now in a down cycle and an uptrending market. And with that, we see that the S&P has to find some spot where it's going to find support. Our next support basically is down here at this 30-day moving average. So we could very easily see this 1385, 1386 area between Friday and Monday, barring some kind of news, as we're definitely in a news-driven market. So trend is up and cycle is down. We're in a down cycle. All right, let's take a look at with more accuracy as to what took place during the week. Here we're 4 days into the week. Monday we got our doji, which looked like a topping pattern. We ended up with an outside day on Tuesday as we had huge gains, went up to that almost up to that 1420 some level. And you see that we then, during the same day, had a reversal and pulled back. This day was Wednesday, which there was a Fed announcement. The Fed announcement at first seemed to have a certain amount of optimism in it, but the truth of the matter is, do you really expect that the Fed's going to do anything in an election year unless they absolutely have to? So fundamentally, if we look at the last quarter, what we see during the last quarter was we saw actually pretty good earnings, even though that they were no great expectations. But earnings on the bottom line were certainly well met, but revenue growth has been lacking. And so the only thing that's enabled them to increase and to keep up with the profits is by cost cutting and productivity gains. And we cannot keep doing that indefinitely. We're going to have to start having growth. We see the unemployment numbers are not really great. I think we've got 42 weeks in a row that we're above 8%, and that this is not healthy for the overall economy. Because as each unemployed person does not greatly contribute to the GDP, so we're not getting that kind of growth that we want out of that GDP in a macroeconomic viewpoint. If we look at the SPX, we see that we are basically sitting at resistance. We're closer to resistance than we are support. So we can expect that August and September, we're going to see some kind of pullback. And we certainly, September is typically the worst month of the year. So be careful of the bullish side of the market as we go into September. Here we are coming into the last week of August as we finish up the month of August, which has been surprisingly strong. Many times that can happen during election year, and that's exactly what we saw. But notice that the movement has gone up rather slow, and the average true range of the moves on a daily basis has decreased steadily as the month has gone by. Now let's take a look and see what that effect has had on the Dow, as the Dow basically went up and had highs for the year, as we saw on, that would be Tuesday, went above the highs for the year and then pulled back, and we've seen help with the pullback as we continued through the week. It is now approaching that 30-day moving average on the Dow, and we'll see how much further that will pull back following the S&P or whichever follows, whatever. Looking at the NASDAQ has been leading the way up, and we see that too has rolled over during the last 3 days, and a very similar look to the S&P. Certainly can see the NASDAQ pull back with much vigor to those moving averages. Next, let's take a look at the Russell 2000. By the way, the Russell 2000 many times can be the only bright spot in the month of September. And so when we look at it, we see that we're in a trading range. We did pull back. We actually had a little bit of foreshadowing of that as we had an inside day on Monday. And then we see that big pop up in the pullback on Tuesday, just like the rest of the other indices that we look at. Taking a look at the VIX, we see that the VIX was at very, very low, down around that 14. It actually got into the 13 level. And we see that we're certainly picking up a little bit of volatility as the market's pulling back. And we have plenty of room to the upside for the VIX to move during the end of August. Again, worrying about the month of September is probably appropriate if you're a bull, as it typically is a month that does not provide for us a great deal of joy if you're a bull in the market. Looking at our ETFs, taking a look at the bonds, we see that the bonds did respond to the upside after almost thinking about going down to the 200-day moving average. And we see the bonds are responding in an upward manner as the market is pulling back. Looking at the financials, the XLF, which is another ETF for us, we see that the financials followed the same pattern as the S&P and the Dow, and that doesn't come as any great surprise. All of these we were talking about, the air was getting thin up here, so as we've got this rollover, it's certainly providing opportunities on the bearish side of the market for us in an uptrending market. So it's a bit of a counter trend trade, but it is a cycle trade. Oil held its own the last couple days as it traded sideways as the market pulled back. A little bit of a pullback today with some little greater volume as we look at USO on a 3-month chart to see where oil is relative to the last 3 months. Next, let's take a look at gold and see what the gold standard has done. The GLD is our ETF for identifying that. And look at, can we call that a breakout as gold is headed up in this market, as there's a little bit of fear and some movement to safety with gold. And ultimately, if we look at the SPY, we can talk about the volume in the overall market. So looking at that, we see that we certainly have had some lethargic volume during the month of August, as we see a pullback and a lot of margin in the volume. And of course, this doesn't provide any great impetus for trading, as some of the liquidity leaves the market. As we go into this last week of summer, we may see even less volume as we head into September. So some people have a tendency to take this last week off in the summer and go out to the Hamptons and Long Island and the places where they love to go. So with that, we've looked at our markets, we've looked at some ETFs, and the next thing that we'll look at for those of you that are gold members is for stocks to watch. And we've got some that we've been following for quite some time. And if you're interested in more free videos from Options University, go to www.optionsuniversity.com/free gold, and you can see this in the music at the end. This will be printed out for you again. It's www.optionsuniversity.com/free gold. So with that, thank you for being with us. This is Butch Shorak for Options University. It's Friday, August 24th of 2012, and thanks for being here.